All right, welcome everyone. Thank you so much for joining us this evening. We do not take it for granted because you know how the weekend is. There are so many places that you could have been, but you decided to be here. And we are happy that you're joining us. So please, once you join, can you introduce yourself in the comment section? Yes, Suleiman says, my name is okay from Abuja, name of my beans collection. All right, nice to meet you. Please, everyone, just introduce yourself in the comment section. Keep the introduction coming in, please. And if you know anyone that's supposed to be in this meeting that is yet to be here, please call their attention. I know it's Sunday, like for me, you can see just maybe finishing from church and all. Okay, my name is Tayo from Lagos. I run Apple Tutors. Okay, welcome, Tayo. Please keep the introduction coming in, and I think we can start right away. Okay, Ikechukwu Godwin Sunday from Benin. Wow, an illegal practitioner. Welcome, welcome. Welcome. Please, immediately you join in, please introduce yourself in the comment section and we will start right away. We are already behind time. Welcome, everyone. Welcome. So today we are talking about understanding the different legal structure for your business. And we know that this is mainly a tax compliance webinar, right? But I decided to bring this in so that it will give us a background. And I want to sound a disclaimer that this is not a law class, right? This is just me trying to fill up a gap that I have noticed with business owners, right? Most times I get the questions about how people evade tax, or people are afraid of it, or people think that, I don't know, there's just so many people just have so many reservation about tax, which is why I reached out to my friend and we decided to do this so as to bring help to business owners. So it's not a law class as to go into the nitty-gritty, the case laws of tax and all. No, it's just to let business owners know the different business structure that they choose and the tax implications, so that it will guide them to know the decision that they want to make for themselves. So let's dive in right in. Ada joined and Victoria also, but I've not seen their introduction. Please introduce yourself in the comment section, please. Thank you. So we'll go right into the lecture for today so that we will not take time, because I have to give time to the task exposition. So let's get into it. Please keep on introducing yourself in the comment section. We will read through. Thank you. So basically, we are starting with just introduction of Adanso Legal. So this is what we have been doing since 2016, helping businesses and creatives build legally compliant businesses through business formation at Corporate Affairs Commission, intellectual law property protection, general regulatory compliance with the required regulatory bodies, protection of interest through contracts, agreements, drafting and review, general legal advisory services, due diligence, identifying possible legal risk and corporate governance. So we have mainly been working with business owners for the past 10 years. So yes, just like we told everyone to introduce themselves, so this is me introducing myself, right? Welcome, welcome. I'm seeing some people are joining. So this is me, became Rebecca, and I'm a business and intellectual law property lawyer, and I hold an MBA. Yes, I'm a lawyer, but I still did my MBA in Human Resource Management from Ahmadu Bello University, and I have been in active business and intellectual law practice for the past 10 years. I'm also a member of the Institute of Chartered Secretaries and Administrators of Nigeria. I am the principal partner of Adanso Legal Consult and Diana Spectra, and I have structured over 300 businesses and counting, right? And most times I work with compliance officer, company secretary, corporate lawyer, and human resource management consultants across various organizations. So usually happen like maybe when we structure some business, and they just say, oh, come in and do this for us. So that's why. So let's dive into straight away to the contents of today. We're going to go into definitions. We are going to go into types of business structure. We're going to look at after registration of your business, what next, and now structure your business with Adanso Legal, right? So the definitions we are looking at here is legal structure. You know, some people, you know, the first decision you are going to make immediately after your immediately after deciding that you want to run a business is deciding the legal structure that you want. And I must mention that there is a gift, right? We have a gift for people that will stay to the end of this program, and so many discounts too for people that will stay till the end of the program. So now, legal structure, this is the type of setup a business takes to carry out its daily operation as permitted under the law. For example, some people choose enterprise, that's sole proprietorship, partnership, or limited liability company. And the factors that you have to look at before you choose this is equity funding, control, capital, whether such business is capital intensive, whether it takes a whole lot to you know, to float that company, and the rest, taxes that you need to pay. Then whether you want the business to take up a legal personality, then the different licenses and permits that is needed for that business. That's what you look at, not the payments. You know, sometimes because enterprise is cheaper to be formed at Corporate Affairs Commission, businesses just go straight to choose that, right? But that is not the best for you. So these are the factors you have to look at if you are to decide you want to choose the right legal structure for your business. So now we're going to enterprise. Enterprise, this can be a sole proprietorship or a partnership, right? In this enterprise, the person, that's the owner, is personally liable for the debts of the business, because you are just registering the name at Corporate Affairs Commission, right? And you are still the business. The business is not separate from yourself. Please, if you come in, introduce yourself in the comment section. Thank you. You don't have legal personality. There's no equity funding, because people will not want to put in their money in the business, because they need to be sure of what happens in events that the business pulls up and you need to pay off debts and the rest. It cannot sue or be sued or enter into contracts. Why? Because it does not have a legal personality. Then for enterprise, the taxes that they pay is value-added tax, personal income tax, and paying, because it's still the individual, not the business. Shegu is going to deal more on that. Then partnerships too. You know, maybe you want to go into partnership with one or two persons, you can bring them together, and you have to consider control. Maybe two of you want to control and pool your resources together, but all of you are still liable for this partnership. Partnership per se, you can just register it at Corporate Affairs Commission, but Corporate Affairs Commission does not guide the formation, right, or have rules for partnership. That's why there's partnership deed here. You can decide to draft a partnership deed that stipulates everyone's functions and contributions to the partnership. And the taxes that they pay is value-added tax, personal income tax, because it's still the individuals. Now we go into thank you, Victoria. Thank you. Now we go into limited liability company. This, if I am to advise, this is the best choice you're going to make for your business, right? The best choice you're going to make, because it has legal personality. Please, can you help us mute everyone? Thank you so much. Legal personality. This is when you form a legal liability company at Corporate Affairs Commission, it's assumed to be an individual. It has legal personality. It attracts equity funding. People are willing to invest in the business because it's regulated by the law. It's regulated by Corporate Affairs Commission. You just don't do as you like, just maybe as a sole proprietorship. People's interests are involved here, so they know that it's going to be protected, so they can put in their funds, and there will be Most times too, you can also sign shareholders agreements with them, or investors agreements, to be able to stipulate who gets what is this person's role at the end of the day. The taxes they pay, yes, there are numerous company income tax, VAT, value-added tax, personal income tax for the staff and the rest. Like I said, Shego is going to deal more on that. Then I'm just non-profits impacting, like when people don't want to pay tax and all, or you may decide limited company by guarantee. Maybe you have research or something you want to further in, you are very much interested in, you can just decide that it's company limited by guarantee, or maybe any non-governmental association, foundation, clubs. Taxes, they don't pay tax, but they make returns annually, which if they don't, they are going to pay default fees on. After registration, what next? Most times when business owners register their business and they think that's all. No, that's not all. There are a lot of things you have to do immediately you register your business. Immediately you register your business, the next thing is to get to the tax office, right? And get your TIN number, tax identification number. Don't be afraid of tax, right? Get your TIN number and make your returns. The ones that have to be done monthly and the ones that have to be done yearly. And we know, yes. So, and we know that we know that, yes, Shelby is going to talk more on that. I know how that when your turnover is not even up to 25 million, you don't even need to. Trademark registry, if you are building something that you want to sustain for a long time, you need to protect it. And that's done only in trademark registry. And it's not Corporate Affairs Commission, right? Corporate Affairs Commission does not give intellectual property protection to your name. Then permits and licenses, depending on the kind of business you are going into, there are permits and licenses. Like, for instance, if you're into skincare, you know that you must get NAFDAC approval. So those are the kind of, or maybe if your business is into jewelries and there's some other businesses that you need to get SCOM certificate from EFCC. Then contract and policies, you need to protect the interests of your business and all the stakeholders involved in your business, both your staff, your suppliers, your dealers, your investors, all of them, you need to protect your interests through contracts and policies. Then annual returns. You have to pay annual returns at Corporate Affairs Commission. Annual returns and tax. These are why I'm bringing this up, is that these are things that are usually confused with tax, right? Annual returns is not tax, it's totally different from tax. But this is something you must pay at Corporate Affairs Commission if your company is to remain active and not to be struck up, because you already know what's going on, that CAC wants to strike up some companies off the register. Annual returns is to be paid yearly at Corporate Affairs Commission. It's paid by all entities, both enterprise, limited by liability company, or even non-profits, and it does not depend on profits. Penalty is striking off, or your company will be inactive at Corporate Affairs Commission. And we already know the notice that CAC wants to delete companies from their name, from the list, because they are inactive and they've not paid their annual returns over time. And yes, they gave 90 days for such companies to pay off their annual returns, but this is now 35 days, so you have less than 1 month to do that. And what happens when your company is struck off the register is you will not be able to access your funds, and you'll not be able to access your funds, and it will be hard for your property that you bought in the name of that company for you to regain it back and all. So these are regulatory bodies that most of us have to be aware of, especially if you're running a business in Nigeria, right? Company registration is Corporate Affairs Commission. That's strictly their functions. This is not SMIDAN, right? So many business owners make the mistake of thinking that registering with SMIDAN is, or getting maybe SMIDAN, small and enterprise certificates, is a guarantee that you're going to use that certificate to do whatever it is that you need to do. No, it doesn't work that way. Corporate Affairs Commission is the body that regulates company registration in Nigeria. So if you have not gotten your CC certificate, you are yet to start. Then there is trademark registry. This is where you protect your intellectual properties, either it's trademark, copyright, or patents in Nigeria. The next is tax, which Shegun is going to deal so much on, providing regulatory tax services. Then there is school certificates that's supposed to be given to curb against money laundering activities. Then there is banking license, providing regulatory and compliance service for financial institutes in Nigeria, right? Then this, okay, just like I said before, this is welcome, Maria, welcome. Please introduce yourself in the comment section. Okay, so just like I said, this is not a structure your business per se with webinar, because we are dealing mostly on tasks. So if you want us to structure your business with Adanso Legal and as to get all of these documents, maybe free consultation, because when I mentioned those regulatory bodies, it may not apply to your own business, but it's only when we sit down to talk one-on-one and we discuss what your business is into that we'll be able to advise properly as to the kind of formation that you need for your business, the intellectual property protection, the regulatory bodies that your business have to, and this will be working hand in hand with us, just having a consultation, maybe 30 minutes. Then we create the legal checklist for your business, right? It's not every law that applies to your business. So we're going to create a legal checklist for your business, and we draft 5 legal documents for you. Either you want a non-disclosure agreement, you want a contract with your investors, or whatever it is. Then we have to create a group for everyone for close support group. Then there's 5% discount on all filings. This is something that you should get at 50,000 and all, but for everyone that joining us today, you have a discount, and that is just 20K, and that's from now till tomorrow noon. So we're going to keep it running from then to from now till then. Let's help you to structure your business and all. And if there's any need you want to contact us and all, these are contact numbers. You can write us. You can give us a call, or maybe even follow us on all social medias, because we definitely are going to be sharing tips on how to structure your business and all. So thank you for your attention. I will just rush it so that Shegun can come on board to take the task aspect of the compliance. Please, if you have any question for me, you can drop it in the comment section, so that while Shegun is taking his own section, I'll be able to attend to it, take notes of it, and answer, right? So is there any question? I will address this afterwards. Thank you so much. Shegun, please, over to you.
Yeah, thank you, Rebecca, for that amazing session, and welcome everyone. Good evening once again. You're welcome to this brief class. Today, I will be sharing with us steps and guide on how to run a tax compliant company in Nigeria. You know, when we talk about business compliance, there are several areas of compliance when it comes to operating a business in Nigeria. We talk about things that has to do with tax. We have compliance as regards pension. We have compliance as regards insurance. And for every company or any business that is operating in this country, you have to abide by these rules and regulations. So it's when you abide by this regulation, that is when you could be seen as being legally compliant to run a business in the country. So for the purpose of this class tonight, would be learning about taxes and what it means to be tax compliant. would understand the key components of tax compliance. We would also share brief knowledge on how to maintain proper records and what proper bookkeeping means for tax purpose. I will also identify relevant books that are necessary to be kept for tax compliance purpose, and also would recognize the disadvantages of non-tax compliant. So without wasting too much of our time, when we say taxes, what do we mean by tax? Most times when we have interactions with business owners, they tend to look at you and say, what is tax? Must I pay tax? Is it compulsory to pay tax? And the simple answer is that yes, it is compulsory to pay taxes, because taxes as it is explained, or as it is defined, is seen as a compulsory or mandatory financial charge that every country levy all businesses and individuals that are residing in that country. So as long as you are an individual, or you are a company, or you are a business organization, you must pay taxes. So individuals, for example, we pay tax on any income that we earn, either by running businesses, or by being a full-time, or by being employed. Any income we generate, we pay taxes on it. But for companies and for businesses, they pay taxes on their profits. So there are different types of taxes, and depending on the type of businesses you run, or depending the type of your organization or your business registration, it will determine the type of taxes you pay. And the structure of your business is also determine who you pay the taxes to. So the table we have here shows the several types of taxes in the country, and the several arms of the government that are in charge of collecting those taxes. So, for example, if you are registered as a company, so when we say company, we mean limited liabilities, unlimited liabilities company, you are supposed to be charged by the federal government. Any company, or any company, yes, any company, either limited or unlimited liability company, will be charged by the federal government. And there are several types of taxes that you are eligible to pay. For example, the company income taxes, which it is being paid on your profits on an annually, and the value added tax, which is paid monthly on all sales of goods or revenue earned from each services. Then there are taxes like withholding taxes, which is like a prepayment of your tax. There is petroleum profit taxes, which is paid by uh, oil companies involved in the exploration and the upstream sector of the oil and gas uh, industry. Then there is the capital gain taxes, which there's the capital gain tax, stamp duty, and there's the litter levy. All these taxes that I mentioned, I can see, are being paid by the companies, and they are payable to the federal government, which the Federal Inland Revenue Services is in charge of collecting that. So if your business is registered as a limited liability company, which is different from an enterprise, you are supposed to pay your taxes to the federal government. But if your business is registered as a business name, as an enterprise, so if your name is, if the business is registered as like something enterprises, your taxes is to be paid to the state government. So the state government taxes both business names and individuals. So if you are a salary earner, your taxes goes to the state government. Or if you run a business, if you are registered as an enterprise, as a business name, your taxes goes to the state government. And the different types of taxes that goes to the state is your personal income tax, your capital gains tax for if you're an individual, your withholding tax if you make some lottery or pool winnings, market levies, naming of streets, Also, the local governments also have their own types of taxes: the tenement rates, the merriment, wrong parking, signboard advert permits, and what have you. So for every businesses, there is all these arms of taxes that you are supposed to be aware of. So when you know the nature of your business, the nature of your business registration, you can now look at this table and see which of these taxes pertains to you and which of them are you supposed to abide with. So when we say tax compliance, what do we mean by tax compliance? Tax compliance or compliance simply means that you have abide by all the relevant tax laws and regulations, and you have you've abide with all the reporting requirements of your host countries. And why is it important for us to comply with taxes? Not just taxes, but every form of compliance that is relevant for all business. This thing. Number one is that compliance with tax improves your credit rating and credibility. For example, if you run your business to the extent that you want to access opportunities, maybe from the bank, you want to access some financial opportunities that maybe government is giving is trying to support or boost businesses, and they are giving a particular amount of money to be available as investment or as loan to business owners. One of the things that would be the requirement would be you complying with tax laws and other regulatory laws of the country, and they are going to ask you, where is your tax clearance certificate? So if you don't have that, then it would reduce your credit rating and the credibility of that business. Another importance also is that if you are trying to access maybe foreign customers or customers that are official organizations or big companies, and they are trying to do things that are corporate in nature, having your tax clearance is going to improve the loyalty and trust that they are dealing with a credible businesses. Also, one of the other opportunities is that having complying with laws also give you access to government opportunities, contracts, tenders, if the government is trying to open opportunities to uh, businesses that are operating within their country to access or to supply them some goods or services. Having or complying with tax laws is important for that. And the last but not the least is the avoidance of penalty, fines, and legal actions. If you are not the tax laws and regulations of your host country, there is a tendency that you'll be visited by the tax authorities to ask you to pay penalties for not filing, or pay fines or legal actions for either for not filing or filing the wrong tax returns. So for you to avoid all these penalties or avoid the disadvantages uh, of not complying with tax laws, what are those components? If you want to be compliant with all tax, or you want to be compliant with the tax laws of the country, these 4 steps are components or steps that can guide you in ensuring that you are compliant. The first thing is for you to register with the appropriate tax authority. So after you've identified the types of company you run, either it's a company or it's an enterprise, you have to now first register with the appropriate tax authority. So either it's the federal government or it will be the state government, whichever applies to your uh, it applies to your organization. Then the next thing is for you to identify the necessary tax you are supposed to pay, then calculate and pay them uh, regularly. Pay them as at when due before the deadline. So VAT, for example, you are supposed to file before the 14th of every subsequent month. Company income taxes are things you are supposed to do annually. So you are supposed to calculate the correct thing and pay them to the appropriate body. Then the next thing is, after calculating and payment, you have to file those returns and your payments at the appropriate tax office. So if you are dealing with the state, you need to identify the tax office of the office of that state tax office, or you identify the tax office of the Federal Inland Revenue Service. We have a lot of them around us. You can, search on Google or go anywhere, and you can identify those offices. So if you've calculated, you need to now file at as at when due. Then the next thing is you also need to review the compliance law, review the tax laws regularly from time to time, because it changes. For example, for the past 3 to 4 years, there has been new Finance Act coming on an annual basis. There's a Finance Act for 2019, there's one for 2020, there's one for 2021. So, and as this Finance Act gets released, there are new regulations, new compliance requirements that comes up. So as a business or as a business owner, it is important to stay compliant for you to be up to date on all these laws and regulations. So these are the basic thing you need to do. If you can register with the appropriate tax body or appropriate authority, calculate and pay the correct taxes, file them at the appropriate tax body, and also ensure that you are up to date on the compliance laws and the tax laws, then you can be rest assured that you won't have any fines, penalties, or issues to deal with when it has to come with taxes. So as business owners, one of the things that is important for the payment of correct and timely taxes is the aspect of record keeping or bookkeeping. Bookkeeping is an important aspect of business that so many business owners shy away from, and it affects us in a way that we can't even calculate the negative impact that it could have on the business, because one of the biggest threats to a business surviving is accurate use of data. Because when you use data, when you keep proper records, you can actually know how your business is performing, and how the business is thriving from time to time. So it is important for business to keep records, not just for tax purpose, but for the purpose of the business itself. Because if you don't keep and maintain proper records, you won't even know how to assess the performance of that business. So what is bookkeeping? Bookkeeping is all about keeping accurate records of all the financial transactions that happens in your organization on a day-to-day basis. So it involves you maintaining a comprehensive and accurate financial records of both your income and expenses, your assets, and also any liability that the business is, taking up. So if you do this, it helps with tax purpose also, not just for the business, but for tax purpose. And it is very, very essential for tax purpose, because by the time the tax man is coming to assess if you are paying the proper tax, if you pay the correct taxes, what is going to be asking from you is your records. So if you are a business owner or you are a company that doesn't carry out proper bookkeeping, when the taxman comes and is asking you, where is the record of this, where is the record of this, then you have no way to even prove to him that the tax you are paying is correct. So it is important for business to keep books for proper reconciliation of taxes. So another thing is that it helps for proper documentation of all your income and expenses, and ensure that your transaction is transparent in nature. And having records or having proper bookkeeping structure in the organization will help you in building trust with both the tax authorities and any of your stakeholders that you want to deal with. So it could be that you want to raise funds, you want to expand your business, and you are looking for investors. And one of the things investors will ask you also is, where is your record? They want to see what is the records of your sales, how much have you made in profit, what is the value of the business, And all this can only be possible if you have proper accounting records, you have proper books records of all the financial transactions that has happened in your business. Also, it helps during audit preparations also, because there's also what we call the tax audit. Most times, as small business owners, we might not really have, we might not really face these things yet. But if you are building your business for it to be big in nature, if you are someone who is not just running business because you want to make a little ends meet, if you are trying to build a big organization and you are looking at that business as something that will be big in the future, then it is necessary that you put all these things in place now. Because as a small business owner, no more, maybe much money or huge amount of transactions is not moving through your bank accounts yet. Tax people might not really have your time, because also they always want to ensure that the energy and the resource they put into tax compliance is bringing the, some, they call it value for money. So if we spend a lot of money into chasing taxpayers, we want to ensure that the money we get from there can it has value to what we've spent on it. So as small business owner, maybe your business is not booming yet, they might not have your time, but when you build that business to that to that big organization, that is when you will see tax people knocking at your doors. And if you are waiting till then before you start doing all this compliance, then by that time you will have wasted a lot of time, and you will have accumulated a lot of penalties, a lot of fines for non-complying all this while. And that is when you encounter things like tax audits. So when tax audits come, they tell you they want to audit you for the so number of years. And if you don't have all these records, and you don't have something to present to them when they come, they can just slap any figure on you. They won't, at that point in time, they won't care if you were making loss or if you were making profits, because you have nothing to show that you were not making profits or you were making loss, or this is the amount of money you made as revenue during that period. So bookkeeping is very, very important for you to be able to show the transparency of your business, for you to be able to quantify or measure the performance of your businesses, and for you also to be able to respond to any tax queries, and also deal with any regulatory body as the time comes. So we've talked about the importance and the benefits of bookkeeping, but we also need to talk about which records do we need to keep as business owners. So there are basically 5 important records that I have listed here for a typical business or a typical organization. And the first thing is the general ledger. So as business owners, as non-accountants, we might not understand what general ledger is, or maybe these terms, but a general ledger is just a ledger that shows the records of all financial transactions, including your income and expenses. Then another thing you need to also keep is the sales and purchase invoice. So while the ledger has the details or the records of all the income and expenses that has happened in that organization, the sales and purchase invoices serves as the proof. So they serve as the proof or the evidence of that those transactions actually occurred. So if I'm telling the taxman that in so year I incurred expenses of 20,000, you can see it in my ledger. He wants to see what is the invoice, where is the receipt that I actually incurred that transaction. So it is important that all the records that enters into the ledger is backed up by an evidence, either sales, receipts, purchase invoices, or any other record that can show or that can serve as a proof that those transactions actually occurred. So another thing is to maintain a bank statement, and this is very important. So one thing that I've encountered so many small business owners do with all the people that have all the business owners that have helped is that they tend to make a mistake combining their personal account with their business account. So it always end up giving them issues when you are trying to reconcile what is the expenses of the business or the income of the business from your own personal expenses. And remember, the tax people are at liberty to request for your bank statement. They can request for the bank statement of the business. And once they look at that bank statement, they can decide to strike out expenses that they feel is not wholly incurred or reasonably incurred on behalf of the business. So if the expenses is not for the business, it should not be paid from the business bank account. And if the income is not also not for the business, it should not be sent into the organization's bank account. So it is very, very necessary or very important that you keep a bank account for your business. Also, another important record that is important for you to keep is payroll records. Yes, if you are a business who pays salaries, you are supposed to keep records for all the salaries you've paid. Also, in that record, it should show how much you've deducted as pension and how you are remitting the payee, the personal income taxes of your staff. Because when it is expected that as a company or as a business owner, if you have staff, you are supposed to deduct their payee or their taxes and remit it on their behalf to the government. If as a business owner, you fail to do this and they come to ask you for it, you as the business will be the one to pay for it, not the staff anymore. So it is very, very essential that you keep records of all your salary payments and also deduct uh, deduct personal income taxes, remit them, and keep all the proof of those remittance. Also, last but not the least, a list of all your assets, your asset register, because there's something we call capital allowance. So when a business spend money in buying assets, let's say vehicle, furnitures, you are not allowed to charge the total amount of you spend in buying those assets in the particular accounting year as an expense. The expectation is that you spread the the amount you use to buy these assets over a certain useful life. And that is what we call capital allowance or depreciation. So capital allowance is something that you gain. It is something you deduct. It's an allowance that you deduct from your profits, which enables you to reduce the taxes you are supposed to pay further. And for you to be able to enjoy capital allowance, you have to prove that you bought a particular asset that it is eligible to claim capital allowance. And the only way you can prove or you can show that is to have a register of all those assets and also have the proof of purchase of all those assets. So if you are going to be claiming capital allowances, you can, tender them and claim the capital allowance. So if as a business owner, you can keep all these records that I have mentioned above, invariably you will be able to measure the performance of your business. You can calculate your profit at any particular point in time. And if for anything or for any need, you need to present your records to the tax bodies or to any regulatory bodies, you should be rest assured that you can do this. So
your screen is covered at the bottom. So they are not seeing what's supposed to show there.
oh, sorry. Sorry. think it's better now, right?
Yes, it's better. Thank you.
Okay. So apologies for that. So yeah. So if you can keep all these records, it will help your business in a very, very long way. So it will help you not only to respond to tax people, also for the benefits of your business or for the benefits of you measuring your performance. Bookkeeping is essential, not just for tax, but also for you to know how that business is venturing and how that business has done so far. So what are the disadvantages of non-tax compliance? What if you decide that, because I've seen businesses, so many business owners, they will tell you, what is the government doing for me? What am I even gaining for the government? Why should I pay taxes? Is it compulsory? Is it this? Yes, tax is compulsory and you have to pay it. And there are disadvantages to not paying. So one of the first thing is the legal consequences that could come through fines, through legal actions, penalties. If you decide not to pay taxes and the government writes to you and you still refuse not to pay, it could lead to issues. It could be taken as a financial offense, which could lead to bodies like EFCC coming after you if they think you are owing enough money for them to come after you. So there are legal consequences that could come as a result of it. Tax audits, tax review, it can lead to penalties, leads to fines, and also leads to maybe closing down of the company, them placing an embargo on your accounts, and a lot of things that can happen due to non-compliance with regulatory bodies. Also, it could cause damage to the reputation of your business. Complying with having all these compliance certificates can create trust and improve your credibility within the business community. Anytime when you want to deal with structured businesses, most of the things they ask from you has to do with all these regulatory certificates. They could tell you, we need to see your tax identification number, we need to see your latest tax clearance if you are dealing with reputable organizations. And for you to keep up with their reputation, for you to show yourself as a credible organization, you have to comply with these things and ensure that you have the necessary requirements all businesses needs to have. It could also cause financial strain for you, because by the time the tax authorities or the regulatory authorities start coming to enforce compliance with you, it could lead to you incurring unexpected expenses that you didn't plan for. Because by the time they come for tax audits, you will be made to pay the tax you are supposed to pay normally. Then you still now pay fines and penalties for not paying when you were supposed to pay. So non-compliance could cause financial strain for your businesses, because at that point in time you now have to pay, because if you don't pay, they will be on your case, and it could lead to legal actions or things that you don't want for your business. Also, it can limit the growth of that business, because non-compliance can affect your abilities to attract growth opportunities. So you may be trying to look for investors, you might be trying to apply for a particular grant. The government can throw out a particular opportunities for all businesses operating within the country. And for you to be able to access these opportunities, you need to show proof that you are a legal recognized business through showing tendering your incorporation certificate, giving them your tax compliance. They want to know that you are complying with the laws of the land. So if you can't show that, then the ability to accept or to access those opportunities can be a challenge for you. So one thing I forgot to mention is is that during the issue of bookkeeping or relevant books is, when listing all these sales ledger, invoice, this and that you are supposed to maintain, it can be a challenge for you as a business owner, having to maintain all these records and also run the day-to-day business activities. So it can be challenging. And with the advent of technology, there are tools that you can use to actually streamline your bookkeeping process. There are tools, softwares that are cloud-based, that you can even access the free version of it if your business records or your activity level is still minimal. So there are softwares that you can use, if free version, most especially, that you can use to keep your records. And when your transactions keep getting bigger, you can now upgrade to a bigger version for you to be able to access more capabilities of those software. So if you would like to, get a guide, a one-on-one guide on how to structure your bookkeeping or implement an accounting software that can help you to keep all these records, please, you can feel free to reach out. So these are just terms. We mentioned issues of VAT. So just regular taxes that is necessary for all businesses. Number one is the VAT. So VAT is seen as a consumption tax that is essential to be paid by both business owners, which is enterprises, and companies, or yes, companies. So it is charged at 7.5% of the goods or the service that you render, and it is being borne by the final consumer. So if I am into sales of any product, or I render a service to you and I charge you, let's say 1,000 for that particular service, I'm supposed to charge you additional 7.5%, collect it from you, and remit it on behalf of you to the government. So VAT is something you charge the consumer, but as a business owner, you collect it on behalf of the government and you also remit that. So company income tax is the tax that is levied on all the profits of companies in Nigeria, and it varies between 20 to 30% depending on the size of the company. But also, if your particular company is not earning up to 25 million as revenue in a particular year, then you are not meant to pay taxes. This is one of the advent of the Finance Act of 2019, where the structured business into small, medium, and large. So small companies are not supposed to pay taxes because the idea is to encourage them to put that money back into the business for the growth. So if your business earn less than 25 million, you are not supposed to pay tax, but you are still meant to file. You are still meant to prepare your accounts at the end of the year, show them that I made 25 million and I'll be paying 0. Then you file that account and submit it to the tax office. So not just because you are a small company and you are not supposed to pay taxes because you earn less than 25 million, doesn't mean you are not supposed to prepare your accounts and file it and submit at the DIS. So if you don't do that, the essence is that you are going to be charged penalty for non-compliance because you didn't file your returns at the tax office at the end of the year. So you will pay penalty, but you will not pay tax because you are not eligible to pay tax. So it is essential that you do the necessary filing as at when due. So if your revenue or turnover is 25 million to 100, then you'll be paying 20% because you are seen as a medium or small, a medium size company. Then if your revenue is 100 and above, then you can start paying the 30% as it applies. So another thing is personal income tax. When companies pay company income tax to the federal government, individuals and enterprises pay their personal income taxes to the state government. and it varies from 7.5% to 24%, depending on the level of income of the individual also. Also, we have the education tax that is 2.5% of accessible profits. It is paid by all companies in Nigeria. The government introduced this tax in order to be able to create revenue to fund education in the company, and all companies are meant to pay this. Then withholding taxes are deducted from source. So withholding taxes serves like advance payment of tax. So it's one of the techniques put in place by the government to ensure that everybody pays taxes. So if I render a service to you and you are supposed to pay me, it is expected you withhold a portion of my money that you are supposed to pay me and pay it to the government on my behalf. Then at the end of the year, when I'm supposed to file and pay my company income taxes, it is expected that they will deduct the portion of withholding tax that has been remitted on behalf of me by my customers during the particular year, and I will pay the balance. So withholding tax is not a tax itself, but it's just like an advance payment of tax. So in conclusion, it is necessary or it is important for business owners or both big and small business owners to understand all the different types of taxes and comply with them, because by complying with all these tax laws and regulations, and not just taxes only, there are other sources of compliance like the pension compliance, the ITF compliance, the NSITF compliance, which is the Social Insurance Trust Fund, which all organizations are meant to comply with. So by understanding all this compliance and complying with them, you'll be able to avoid penalties and legal actions, and you'll be able to access government opportunities and increase the credibility of your business with your customers and your stakeholders. So thank you for paying attention to this class. Thank you for joining. I hope we've learned one or two things in this class, and the next thing is to take any questions that you might need. And if you would like to reach out to me, you can access through the information above. And also, those that are a member of the WhatsApp community will be finding a way to share these slides with every one of you. So thank you very much for paying attention. Thank you for joining. And at this point in time, if you have any questions, if you have any challenges that you need us to share more light with, please, it's time. So thank you, Rebecca.
Thank you so much, Chef. That was a lot. Like, this is a full class on tasks. Like, I know I also wanted to, was at the point where I needed to find my own taxes and all that. I had to be going through all this with Shego and all. Shego, there's a question for you. Someone said Tara said I registered a limited for over 10 years without business. What tax am I obligated to pay?
Okay, so for a business, for 10 years you've not done any business, you are not meant to pay any tax. Because as I said earlier, or as I explained earlier, tax is being charged for a company. You pay tax on your profits. So if you've not done any business, then you are not supposed to pay tax, even if you've registered the business for the past 10 years. So all you need to do is to show proof that you've not done business. So if you need to obtain a tax clearance for that particular company, then you are supposed to prepare what they call a statement of affairs, which will show that yes, the company was registered, but you've not done any business, and you just file that at the necessary tax office, and you can obtain your tax clearance. So you are not meant to pay any tax. But on the legal face of thing now, on the legal face of it, I think the CAC doesn't I don't know. Rebecca can shed more light to that. I don't think the CAC would say don't pay annual filing if you've not started business or not. Would they?
Okay, Mr. Tayo, can you expatiate, maybe dropping the name of the company so that we can check the status at CAC, because definitely at CAC, whether you do business or not, you have to pay annual return. So it's not like tax, right? But and at CAC too, it's just a stipulated fee that you're supposed to pay. All right, I'm going to check that. Then there's another question for you. There are lots of questions for you, Shegun. Yeah, so breeze up. So someone is asking, yes, I know we talked about that. Ada is asking, can I pay my personal taxes online instead of going physically to the tax office?
Yes. So so it depends now. It depends on the tax body, because different taxes is being administered by different tax body.
I think that's why
So
she said her personal tax. Ada, can
so
you
if it
clarify?
is
Your personal tax,
if
that means
so
it's
if it's
Peter.
a personal tax,
Yes.
if it's a personal tax, so it depends. That's why I said it depends on the body. So Lagos and Abuja now have given that opportunity for you to file online, right? The LIRS, which is the Lagos State Inland Revenue Service, and the FCTIRS have given you opportunity to, pay online through Remitter and send your details to their email. But for other states, I'm not sure. So it depends. If Ada is in Lagos or in Abuja, she will be able to do that. But if she's in
Ada,
a
please,
state
sorry, Ada, tell us
where
your
the
location.
state body doesn't allow that, she won't be able to do that. So that, I think that's just the answer to that.
Okay. Binta is asking, does non-profit organization pay tax as well? I think I
Uh,
answered that before, but you can still answer it, please.
yeah, so a non-profit organization is not meant to pay tax. That's the idea. But there are some there are some instances that will make a non-for-profit pay tax. For example, if a non-for-profit offer services, so we know NGOs, for example, they've built competence in a particular niche, and some organization call them to come and render that service. It could be training, capacity development. So if as an NGO now, you carry out an economic activity, yes, you carried out an economic activity to a third party and you received money from it, then you will pay tax on the portion of that economic activity that you've carried out. But on a normal ground, for the actual business or the actual activity that the NGO was registered for, you are not meant to pay taxes on it. But if there's a portion of income that comes to that organization as a result of carrying out any economic activity, then you pay taxes on that portion of the income. Also, if an NGO, engaged maybe a consultant, they are also expected to we do what we call the withholding tax, withhold the withholding tax from the fee of that consultant and remit it on behalf of that consultant. If they have staff, they are supposed to comply with the personal income tax laws also. So NGOs doesn't pay tax, but they are also meant to comply. Even though they are not paying tax, they are supposed to, prepare their financial reports and file at the tax office, even though they are not supposed to pay any amount as company income tax, but it's necessary for them to prepare their accounts and file at the end of the year. So that is for NGO. Then there is someone who says, I run a sole proprietorship. I registered my business in December. Please, when am I meant to start paying taxes? So for you, you are supposed to pay your tax at the end of the year. You will pay your personal income tax at the end of the year. So we'll just assume that your business calendar year runs from January to December. So from December this year or by January next year, you should start thinking of complying or doing your company, your personal income tax to the state tax body that you are based. Also, if when you render services to your clients, you charge them VAT, you are supposed to be remitting that VAT on a monthly basis. Then if you have staff, I don't know, if you have staff and you pay them salary, you are supposed to remit their personal income tax at the end of every month. So that is it when it comes to sole proprietorship. So someone said, is sale of land vatable for real estate business? No, sale of land is not vatable. You don't pay VAT on land. The only thing you do is you pay capital gains tax. So if you buy landed properties for a particular amount and you sell that landed property at a future date and there has been a capital gain, then you are supposed to pay what do they call it? Pay capital gain tax on the sale of that land for the gains you gained from the sale of the land. So land is not vatable. But if you render agency service, so real estate now, maybe you render agency services. So on that, your agency fee, then VAT can come on that. But the land itself or the property itself is not vatable. But for your agency services, then that will attract VAT. Yes. Do NGO pay annual returns? I think the answer is yes. NGO pays annual returns. Rebecca, can you shed more light on that? NGO pay, well, to the best of my knowledge, any organization that is registered with the CAC is expected to do their annual returns.
Yes, you are very correct. Mr. Daya, I just sent a picture. I've checked your business is showing inactive. So I guess you will have to pay annual returns. Please, I think I missed it up somewhere. There was someone that asked the question that she wants to know more on non-profit. Please, can I understand your question? Like, do you want to, because, or should I go back to sharing my slide on that? Please, let me know exactly what you want to know about, please. Please, we have a few minutes to go. We don't want to keep anyone waiting, please.
Okay, I think she is referring to documents needed for the registration of NGO.
Okay, all you need for NGO is just to decide on the people that are going to be your trustees, right? Decide on the people you want to use as trustees, then just get their identification numbers, their ID cards and the rest, and decide on the name, right? Once you decide on the name, then we are going to conduct a search to know whether it's available, and CAC also we have to get the consent of the registrar general. Then we just do the normal procedures to get it registered. It usually takes within 1 month, because once we start the registration, CAC requires that we do a publication. We do a publication that is a non-objection of publication that tells the public that this organization wants to register. And if anybody have any reason why it should not be registered, they should raise an objection. So we submit it and it runs for 28 days. So that's why the registration will have to take that 28 days, right? So yes. So it's quite simple, like, and please, if you are not on the group, if you are not on the group, please, on the training group and all, please drop your number. I'll take it to add you, please. Because we are going to do more of these trainings and you're going to tell us what you want to know more, right? We just want to guide you all the way. Tell us what you want to know more about. We organize some of these trainings and we know when it's convenient for us to do some of these meetings so that no one will miss out, right? Thank you. Please, is there any other questions so that we can call it a day? Okay, Vita Cinema, I'm not on it. Okay, all right, I'm going to add it. Okay, I'm taking note of the numbers. Any other person, any other question? Any other person, any other? Thank you, Shegun. Please help me. Any other thing, please? And if you are interested in meeting us for any of these services, you can reach out to us. Thank you. Okay, someone asked for a sole proprietor, need I to pay VAT? Please answer, Shegun.
Yes, you are supposed to pay VAT. So VAT is called value added tax. So it's a sales tax for every value that is being added, tax is meant to be paid. So either you are a sole proprietor or you are a limited liability company, as long as you offer a particular service, you are meant to charge VAT. So the way VAT works is that you as the business is not the one paying VAT. You are charging the customer VAT because the customer is the one receiving the value and the customer is supposed to be the one to pay the value added tax. So if you are rendering a service as a sole proprietor and that service costs you, let's say, that services you are charging 10,000, for example, then the person or the customer or the client is supposed to pay an additional 7.5% of that fee as VAT. So all you are doing is collecting that VAT from the customer and remitting it to the government at the end of the month. So whether you are a sole proprietor or you are a limited liability company, you are supposed to pay or you are supposed to charge VAT, charge and file VAT. But there is also a but to it.
Let's be honest now. Sometimes you can add this task to your service and someone doesn't want to pay. Can you write your bill, your invoice or your bill to say exclusive of VAT, that means the person should pay VAT on their own? Can you do that?
No, you can't, because again, as the business owner or as the company, the tax law has given you or has empowered you to be a tax agent. So it is expected that you collect this tax and remit. But if you don't collect it, you will be the one to bear the consequences. So while we understand that some customers, once they see VAT or anything, they might start having issues. So the best thing for you to do is to build that VAT into your pricing right off the beginning. So if you are charging this person 50K, know that 50K, you can pay VAT from it. If you are charging the person 100,000, know that you can charge 100,000 from it. And all these applies when you are dealing with some certain kind of clients. There are some clients that you deal with that once they see VAT and everything, someone who understands the tax laws, if you are dealing with a structured business, they know that, yes, this is the fee and tax is necessarily meant to be charged, and they would do it. But if you know that customer you are dealing with, if you put your fee and you are putting additional VAT for 7.5%, it's going to have issues. The ideal thing is as a business person, just in your pricing strategy, just add everything together and give the person the code. So just know that the VAT is already in the figure you are giving the person.
Okay, someone else
What
asked
can
a
you do?
Okay, yes.
What can you do when vendors don't issue invoices? Well, vendors are meant to issue invoice because you request for it. That's just it. Request for it. If you are someone wants to make money from you, if you tell the person, give me your invoice, I don't think the person would object to it. And that is one of the reasons why we say having proper records or having a bookkeeping process in place would give you a business credibility. Because if you ask me for my invoice and I'm unable to give you an invoice, then you might see my business as a business that doesn't have structure, or that business is not credible enough. So any vendor should be able to issue invoice. And if they don't issue, just ask. But if they ask and they still don't issue, it's at your liberty to decide if you still want to deal with them or you want to deal with another organization or another business that is able to give you an invoice.
But what if you've already done the business and you need the invoice to be able to document for your task? Is it something you now have to maybe use your app or something to document?
And because basically before you even carry out, if before I render a service to you, I will have given you my invoice to show my charge. We will have negotiated, agree on the price, and I will give you an invoice. You will accept that invoice. You understand? Before we even start. So it is ideal that before we carry out that business transaction, we've done that documents. Because if I render you service and I didn't give you invoice, we didn't have any agreement, how can I prove that this is what we agreed that you will pay me? So this is business structure issue now. A serious business is meant to have invoices that they issues to customers. So it is one of those things. So, and easily there are apps now that can help you to issue invoice and even send to your customer. You can create your invoice on Microsoft Word or Excel. You can create on PowerPoint. There are a lot of ways you can do invoices now. So it shouldn't be an issue.
Okay, thank you so much, Shegu. I think there's no other question in the comment section. We just want to say a very big thank you to all of you for showing up tonight, right? And please just remember that we still have our support group where we'll be sharing lots of information, and maybe by next month we can be looking at structuring your business, now going into every aspect of the business to structure its agreements and things and all what have you. Please, just like we said, if you're not in the group, please send your number so we can add you there. So until we come your way again, thank you. It has been a lovely time with you all. Thank you so much and good night. Bye.
Bye.
Bye, Winter. Bye, Ruth. Bye,
Bye.
Bob.
Thank
Bye. Please, Bogler, just send your email, please. I don't know if I got your email. I don't know whether I'll be able to differentiate your email from every other email, but please drop your email. Okay. Thank you, Maria. Thank you for sticking with us till now. Bye.